Hey guys, welcome back to another episode of Daily Risk. Candlestick patterns are valid patterns in financial markets that show the best reaction at the desired levels of support and resistance. We cannot use candlestick patterns anywhere on the chart we want. For optimal performance, they should be used where the best support, resistance, and intersections in the trend exist. In this section, we will review one of the candlestick patterns called the morning star and the evening star and explain how to trade with it. We will also discuss how to correctly identify this candlestick pattern, how to trade with it properly, and how to set stop loss and take profit on the chart. So traders, if that's something you're interested in, please give this video a thumbs up to show your support and subscribe to our channel. If you are new, see you after intro. So let's start. Candlestick patterns in financial markets. The evening star candlestick pattern forms at the end of an uptrend and indicates the beginning of a downtrend. This pattern consists of 3 candles in the following sequence: a large bullish candle, a candle with a short body, a bearish candle. With the formation of the evening star candlestick pattern, it is expected that the stock price will change direction and become bearish. Therefore, in such a situation, it is advisable to enter a sell position and stay with it as the downtrend continues. Morning star candlestick pattern. The morning star candlestick pattern forms at the end of a downtrend and indicates the beginning of an uptrend. This pattern consists of 3 candles in the following sequence: a large bearish candle, a candle with a short body, a bullish candle. With the formation of the morning star candlestick pattern, it is expected that the stock price will change direction and become bullish. Therefore, in such a situation, it is advisable to enter a buy position and stay with it as the uptrend continues. Let's explore how to use this candlestick pattern together. It is better to identify support and resistance levels and trends in higher time frames of the desired chart, and then enter buy or sell trades in lower time frames with confirmation from the candles. For example, here we have gold in a 1-hour time frame. In the 1-hour time frame, we have a support level here. If the price reaches this level again, we start to buy or sell trades by seeing the candlestick pattern at this level in the lower time frame. Let's see what happens. As you can see, the price hits this area. We are in the 1-hour time frame. This level was previously determined as a support level for us, and this is the second time it hits this level. Now we are in the 1-hour time frame, and it is better to go to lower time frames and look at the chart in a multi-time frame manner. The best approach is to go 2 time frames lower. That means if we are in the 1-hour time frame, we go to the 15-minute and even the 5-minute time frames. As you can see, in the 15-minute time frame, the price hits the desired level, which was previously a support level. Now, by observing the candlestick patterns, we enter the trade with a risk-to-reward ratio of 1:2. The best time frames for scalp trades are the 15-minute and 5-minute time frames. Let's take another example. As you can see, we have another support level here. If the price reaches it and reacts well, and we see the candlestick patterns here, we enter a buy or sell trade. Let's see what happens. As you can see, the price did not reach our desired level. If the price reaches this level again, we will look for the formation of a morning star pattern and enter a buy trade. Let's see what happens. As you can see, the price touched our valid support level again. We have a doji candle, or a small-bodied candle. If an engulfing candle forms, we can enter a buy trade. This level is broken, but is still not valid for us because no candlestick pattern has confirmed the trend break in its direction. Now we have a very small-bodied candle. And here we have an engulfing candle completing our morning star pattern. We enter a buy or long trade here. Place the stop loss at the last swing and consider a risk to reward ratio of 1 to 2. Let's see what happens. As you can see, the price touched our desired level again. Now we see that candlestick patterns react best at appropriate levels of support and resistance after breaking the trend line. Another example. In this chart, we have an upward trend, and now there is a very good support level in this area. If the price can reach this level again, we will take buy or sell trades by observing the patterns in the lower time frame. Let's see what happens. As you can see, the price reached our desired level. Now we are in the 1 hour time frame. It is better to go 2 time frames lower, that is the 15-minute time frame. If we see the candlestick pattern in that time frame, we enter a short trade. Now we are in the 15-minute time frame. So we wait to see if the candlestick pattern appears. Now we have observed an evening star pattern in the 15-minute time frame, so we enter a sell trade. We place our stop loss above the last swing and consider a 2 to 1 risk to reward ratio. Let's see what happens. As you can see, the price reached our desired level, and our trade closed with profit. The best place to use morning star and evening star candlestick patterns is at support and resistance levels. We cannot enter a buy or sell trade wherever we see these patterns. It is better to respect the desired levels and choose the appropriate support or resistance level for entering the trade. For example, in this area, we have a morning star pattern, and this area is not suitable for entering a buy trade because we have a support level, and the price may break down at any time, and this trade will close at a loss. So, always respect the price patterns at different levels. For example, in this chart, we have a resistance level in the 30-minute time frame. If the price reaches this level again and touches it, and if we have candlestick patterns in the lower time frames, we can enter a short trade. Here we are in the 30-minute time frame. As you can see, the price touched our desired level, which is a very important resistance level. Now, we are in the 30-minute time frame. We go 2 time frames lower to observe the candlestick patterns for entering a short trade. Now we are in the 5-minute time frame. If we observe our desired pattern, which is the evening star pattern, we enter a short trade. As you can see, we have a doji candle. If an engulfing candle forms here, our candlestick pattern will be complete, and we will enter a short trade. Now we have a very strong engulfing candle completing our candlestick pattern. We enter a short trade, place the stop loss at the highest swing, and choose a 2 to 1 risk to reward ratio. Let's see what happens. As you can see, our trade closed with profit. We conclude that the best place to identify candlestick patterns is at valid support and resistance levels in higher time frames and to trade by observing candlestick patterns in lower time frames. In future episodes, we will use other candlestick patterns, backtest them in past markets, and review the correct way to trade with different candlestick patterns. So guys, that's it for this video. I hope this content was valuable to you. If it was, please go ahead and smash the like button to show your support. And if you're new here, consider subscribing to our channel for more content like this. See you in the next episode.